Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, and we are now on September 10th, 2019. Got about a minute and a half left before you're going to see these markets just finish, and that letter S will appear after everything for settlement prices, wherever the settlement is. The event of the day was we've lost the White House advisor, John Bolton. Now, he was fired, asked to resign, or he quit on his own. I don't know what the right story is. I'll tell you what I think and Ira's own take on it. Somebody had to take a fall for inviting the Taliban to Camp David 2 days before the celebration, the anger that we all have over 9/11. I lost friends in that, good friends. No, you don't invite Taliban right in front of that. You want to invite them? Get that all out of the way. What the heck was the hurry? What was the thinking of that? It's my own thing, but if you had friends there, if you felt like we all do about America, that was an attack on our homeland, and you want to invite these people here on the anniversary where we're all thinking about it for tomorrow? So, seeing him go, I just wonder if he had anything to do with it, or if it opened the opportunity where the president said, I screwed up, I got to clean up my house. Whatever it's going to be, it doesn't matter. The market looked at that today as a friendly sign that one of the bulldogs is gone. Now, we still have others. You know, Mr. Navarro is not exactly one of our trade advisors, what I would call Mr. Dovish. I don't think that in any manner. The Chinese responded in part today by saying they want to buy more Chinese goods. Okay, they have said that how many times, and it hasn't turned out to be the way that it is. They have to buy soybeans. They can't get enough from South America. That proves nothing. So we wait and we see what it's going to mean. But this is all taking place, as you know, in front of the October trade meeting. And if you think there's something big there, okay. I think that the market's going to be more concerned with what happens this Thursday with the European Central Bank monetary policy announcement. It's Mr. Draghi's goodbye. This is his last meeting. Ms. Lagarde takes over November 1st. And from that point on, it's her hand that we watch. So is he going to set the table for her, or what's going to happen? That's what we're all going to see. Gold market's still correcting. Remember, I have a gold report out there. The market today went right to a number that I was looking for. Settlements just came in. So gold, the last trades, just so you were watching, were $7 lower than where you're at. And you were higher if you were just looking in the S&P and the Dow from where the market actually finished. Let's go to the S&P because this is the settlement. Now, for the week, we're down 2 points. Not very big, and we're certainly within striking distance of the all-time high settlements of 30.2450 with a 29.78.5. Not far. But what bothers me is we're getting some distribution up here. Instead of moving away from breaking out of this triple top area, if you want, right through here, we got up a little and sort of just stalled out. It could be the European Central Bank. It could be trade talks. It could be that the market has just paused in front of what's going on with us, with our own central bank next week. And it could be the market's looking at what happened in interest rates, where last week we were, around 143 on Wednesday or so in the 10-year U.S. note, and we're back to 1726. So you had what's called a series of crowded trades in metals and interest rates, and they've all given a pullback, and I think that's giving a pause to the market. That's all it is, a pause. You can't say it's in a downtrend if you look at a pattern of higher lows and higher highs. And I know there's a lot of people out there that are fundamentalists looking at which stocks are driving the market up and so on. I'm not looking at that. I'm looking at a chart pattern. Throw the name of the chart off. You'd have to take out 28.89 in order for me to say you've broken the pattern on the swing line. What about moving averages? Well, I told you yesterday you needed a good strong close today, and that would probably kick the 18-day average over the 100. It didn't happen. You're still just a fraction under it on the closing basis. If the market fell back, that's an awful lot of support, these two numbers, to protect that 28.89 level. What about resistance? Well, you're there. The upper Bollinger Band. Now, I still believe what I say. When you get to the Bollinger Bands, you can either run them or you run into a resistance point. Either way, you always look to see what momentum's doing with them, and we have momentum that locked in. It embedded today. For those of you that get my morning subscriber video, which is a paid video service, I was discussing this in detail this morning in it, so go back if you have to look at it again and see what I said about today. In any case, you're at a resistance point, you've got support under the market, and you've changed the momentum from overbought to embedded. Until the red line closes under 80, I expect to see initial good support on pullbacks in this market. In the NASDAQ, you are not embedded. You're just overbought. There's a difference. You don't have several days in a row where both numbers over that number. You did have a nice piece of other information. The 18-day average closed over the green, the 100. That happened today. Yesterday, they were opposite. Today, they're there. So that's a bullish sign in the market. As I said, you're overbought. You've already hit the resistance. You're in a pullback. I would expect to see good support if the market wants to pull back to that general zone in the market. And I'd wonder what's going on if you were able to take out 75, 80, 75 right away, because that would break the pattern of higher lows, higher highs with that bullish crossover. When I come over to the Dow, you don't have the bullish crossover. You're in a resistance zone of the upper Bollinger Band, and you're getting some price distribution in that area. But how many days do we have over with the blue and the red line over 80? Well, today they certainly both were. Yesterday they were. The day before. Not the day before. So the third day is the day that you embed. You've done it. I'm going to look for support on pullbacks into that zone until the red line gets back under 80. So I think the pros are still buying there. And in the Russell, well, the market has come up. You can see yesterday's action. And we said if the market continues, the next resistance is the 100-day. You closed over that, as it turns out. But closing over it doesn't mean it's still not a resistance zone. That area of the upper Bollinger Band and 100-day, it's a pretty strong area. But you're in an uptrend. You've hit all kinds of targets, the 200-day, the upper Bollinger Band. And we said this market's starting to look better than a lot of them, and it's still overbought. It's not as pretty as those that have embedded. That's what I have to say. In the VIX, you didn't get a lot of follow-through. With the stocks going, I would have thought maybe you'd make a run for the lower Bollinger Band. You haven't. You've got a downtrend. The market has spent, 4 days in a row, either side of the 100-day average of closes. It's still looking in the downtrend. We'll see what happens if you get down to that number. I would expect to see it. This is not a trade wreck. I would expect to see just what happens on other challenges of it, where you get the put writers coming out looking for the closest moving average on a bounce, which in this case is the 100-day average. Now we get to that washout scenario where the bond market, if you remember, this is last week, got up here, overbought, couldn't quite get to the upper Bollinger Band. You had set off lower highs, lower lows, so you stepped out of your uptrend, but you were not in a downtrend. You still had the bias up, but you were overbought. Here, this day, last Thursday, is when this whole thing started unraveling in looking back at it. If one went short, the risk was not small because you had to put a stop way over these highs. It was easily $2,000. It doesn't look like it, but it was in that zone. If it drops, the lower Bollinger Band comes into play. Momentum turned down, the swing line, lower highs, lower lows, bias down. You still have the lower Bollinger Band in play. This was Friday. This is what happened Monday, and this is today. So we finally have gotten under a Bollinger Band. Now this is an important move because you got crowded up here, you got ahead of yourself. Will we go back to that? I don't walk on water, I don't know. But I can tell you that on rallies, the 18-day average will be a resistance point. Do I think the bears are going to be aggressive here? No. You're too oversold for them, and you're under the lower Bollinger Band. So a downtrend, yes. Bias down, yes. Oversold and under a Bollinger Band. You only stay under them 5% of the time, typically. When we come to the 10-year note, yesterday, this is yesterday, we had hit that number. We've had a higher high, lower low. So we're trading in the Bollinger Bands. Today you snuck yourself under it. You finished at 130.05, about 10 points under that. You're probably going to bend it down a little bit here. And again, The bulls lost control of this market up here. And I'm going to repeat what I say. More times than not, you take a look at the first hit of a Bollinger Band, it's a resistance zone in the market. And even though it played higher here, it didn't really go anywhere. So now the question is, how far down can this go? Well, you know, some will say, oh, you're going back to the 100-day average. I don't see that, but if anything's possible, you've got central bank meetings on Thursday, the European Central Bank, and next week. I think a crowded trade is getting uncrowded. In TLT, the same thing. Lower highs, lower lows. Forget today. You've been in your downtrends. Yesterday you hit a downside target and oversold. You followed through a little bit today. You finished at 140.69, about 70, let's see, 141.93 is the lower Bollinger Band, a dollar under that. So you gave some money up, okay. In the dollar index, just churning along at that 18-day average. Now, you do have the pattern of bullish here. You've got higher lows, but you also have lower high. See that? It's got to make up its decision what it wants to do. Momentum pointing down still, bias up, trend up. In the Eurocurrency, the market is in a stall, but the overall trend is lower highs and higher lows. I hate when that occurs. To resume the downtrend, yesterday's low is the key number. To say the market is coming out of the downtrend, you've got to take out on this chart at least 110.92.5, and then you have to get through the 18-day average to do that. But remember, I'm going to repeat it. Do you want to go through the European Central Bank meeting first thing in the morning? When you're here at 7:30 in the morning, roughly, we'll be listening to Mr. Draghi's speech, but we'll have the comment as to what the European Central Bank's going to do, and if you want to bet on them, terrific. Here's your opportunity. Which way? In the British pound, what a mess. The market is at the upper Bollinger Band, another resistance point, overbought, higher lows, higher highs, but you've hit your target and you got overbought. Doesn't mean you can't go higher, but you've done that. And in the Japanese yen, you have a market here that is how many days under the 20 level? Well, today is 1, yesterday, day before. So what, not the day before. So you have 3 days in a row that's embedded, which tells me that on rallies, I expect the pros to still be aggressive on the short side. If you fall further, the 100-day average, which has been an important number in this particular currency, I would expect to see a lot of support come in there. And again, you might just see unwinding of markets tomorrow as traders want to get non-directional in front of the European Central Bank meeting. In September, Bitcoin down today, and as we've said, we're void of a trend. You have a higher high and lower low, and you've had that momentum down, bias down, but not trending. Then we get to the differential between Brent and WTI crude. It corrected a little yesterday, got down to a differential of 486, back to 509 today. We're looking at Brent that got up, and I want to show you this. You cleared the Bollinger Band. If you can lift further, the next resistance point, doesn't mean it'll hit it, is the 100-day average. And staying over the Bollinger Band, remember, only 5% of the time do you do that. You got up to that number today, came slashing down, and finished under the lower Bollinger Band. Do you think the pros stepped in there and took some money off the table? I wonder. The trend has been up. I'll question that one. I think so. Where do you think they've been coming out in WTI crude? I want you to look at this. Bollinger Band 100-day average. You get to it yesterday. That's not today. And today the market sinking back. Yeah, it exceeded it, but it's pulling back here. I think they're coming out of the markets here and taking a look. What happens on Thursday? We get the OPEC, non-OPEC meeting in Abu Dhabi. So the new energy minister, the half-brother of Prince Mohammed, is going to have his first seat at the table. There is Saudi energy minister. Mr. Novak is already, and that's the energy minister of Russia, said he sees no reason for no cooperation on this. And what are they looking for? Gee, Saudi Aramco. Do they want prices down? I don't think so. So, just an idea. In the gasoline market, you're up at the upper Bollinger Band. I think pros are stepping out of the market there. This is the market that is the surprise to me. Now, it did its best. You had 5 days in a row over the upper Bollinger Band. I gave the market today no chance of closing over it. I'm wrong. Of course, it did get to 264.80, finished 258.20, and the number I was looking for was under 258. Not too bad, okay? Am I saying a top? No. But there's going to be a point here where this market's running on that Hurricane Dorian pulling, that hot weather that it's done. We're in Chicago near 90 degrees. We're going to be warm for the next 5 to 7. The East Coast is getting it, the whole South. So we're seeing that weather pattern, but it is September 10th. Mother Nature will come to play sooner or later, and this is the kind of rally a lot of traders look for because you probably had a lot of people wrong on the short side down here. This unwinding of part of that is my guess. I want to remind you that my metal report is up. I put it up yesterday, mentioned it here. It only stays up on our website for 5 days. Then it's gone forever. And the reason is it's not about am I right or wrong. It's timely. I cover in the report the seasonals. I cover in the report next price counts often, which is internal measurement we have here. You know, you hear Gann, you hear Fibonacci. We have one here that is unique to this firm called price counts. They developed it, and it's very, very fascinating. And you hit them. You hit. In fact, you stretch out to what we call the fourth one, which in a year's time, you rarely get to a fourth count in anything that you look at. Then you have to look at the quarterly, which I did for you, the monthly, the weekly, and the daily chart. So I give you a whole picture. To see it, all you need to do is go to our website. Under the word education when you're on there, just click that word on. You'll see a drop-down menu, Ira's Metal Report. Click on it, and away you go. I'm Ira. You have a good day, and I'll talk to you tomorrow.